Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 6th, 2024, and we're diving into the latest earnings report from Johnson Controls, a global leader in smart, healthy, and sustainable buildings. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Johnson Controls' performance, especially given their strategic initiatives and financial results for the fourth quarter and full fiscal year 2024.
Revenue and profitability overview. Let's start with the top line. Johnson Controls reported a net revenue of $7.4 billion for the fourth quarter, marking a 7% increase. For the full year, sales reached $27.4 billion, up 2%. John, what are your thoughts on these figures?
These numbers are quite impressive, especially the 10% organic sales growth in Q4. The company has managed to increase its adjusted EPS to $1.28, which is a significant improvement. This indicates strong operational performance and effective cost management.
Indeed, and the GAAP EPS for the quarter was 95 cents. How does this reflect on their profitability?
The GAAP EPS of 95 cents shows solid profitability, supported by a robust net income of $633 million. The adjusted figures highlight their ability to manage special items and focus on core operations.
Segment performance and backlog. Johnson Controls segment performance varied across regions. North America saw a 16% sales increase, while Asia Pacific experienced a 5% decline. Can you elaborate on these regional performances?
North America's growth was driven by strong demand in applied HVAC and controls, with a 16% increase in both sales and organic sales. In contrast, Asia Pacific faced challenges, particularly in China, where the systems business struggled, leading to a 5% sales decline.
And what about the EMEA LA region?
EMEA LA showed a healthy 7% sales increase with an impressive 11.5% adjusted EBITDA margin, up 370 basis points. This was due to improved productivity and a favorable mix from service growth.
The backlog is also noteworthy, reaching $13.1 billion. How does this position Johnson Controls for the future?
The backlog, which increased 7% organically, positions them well for continued growth. It reflects strong demand and provides a solid foundation for future revenue streams.
Strategic initiatives and restructuring. Johnson Controls has been active in restructuring and strategic initiatives, including the sale of their residential and light commercial HVAC business. What impact will this have?
The sale to Bosch Group for $6.7 billion is a strategic move to streamline operations and focus on core competencies. This divestiture will provide significant capital to reinvest in their building solutions business.
They've also announced a multi-year restructuring plan. Can you tell us more about that?
Yes, the restructuring plan involves $400 million in costs over 3 years, aiming for $500 million in annual savings. This will help Johnson Controls optimize their operations and improve profitability.
And they repurchased 5.4 million shares for $370 million. How does this fit into their overall strategy?
The share repurchase is part of their capital allocation strategy to return value to shareholders, indicating confidence in their financial health and future prospects.
Future outlook and guidance. Looking ahead, Johnson Controls has provided guidance for fiscal 2025. What are the key highlights?
For FY25, they expect mid-single-digit organic sales growth and an adjusted EPS of $3.40 to $3.50. They also anticipate an EBITDA margin improvement of over 50 basis points, which is promising.
And for the first quarter of FY25,
they project an adjusted EPS of 57 cents to 60 cents, with continued focus on operational efficiencies and strategic growth initiatives. This guidance reflects their confidence in maintaining momentum into the new fiscal year.
Key takeaways. In summary, Johnson Controls has delivered a strong performance in Q4 and FY24, with significant sales growth and strategic initiatives setting the stage for future success. Their focus on core operations and restructuring efforts are expected to drive continued profitability.
Absolutely. The company's strategic moves, including the RNLC business sale and restructuring, position them well for sustainable growth. Investors should keep an eye on their execution in FY25.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Johnson Controls' performance in the comments below.